In an interview published this hour, President Trump telling Time magazine that he is still convinced tariffs are necessary. He said, quote, "The bond market was getting the yips, but I wasn't." And he said he would consider it a, quote, total victory if the U.S. still has tariffs as high as 50% on foreign imports a year from now. Now, on China, President Trump says that President Xi has called him and that his administration is in active talks with Beijing to strike a deal. He said he expects to have a full slate of deals announced over the next 3 to 4 weeks. So he's now put a timeline on it. He says that he's in talks with China genuinely, but he also said that he wants tariffs and he would be fine, more than fine, with more than 50%. I would imagine, I don't know when this interview was conducted, but if this was yesterday, I mean, if we're in real time, I would think that would scare you.
Yeah,
I think it would scare the market.
That's concerning because I would say most market participants you talk to say that they would understand 10% tariffs and be able to manage around that. Higher tariffs, particularly 50% higher, would be a really big deal. And I've been doing some reporting around the conversations that the big retailers have had with the president earlier this week, trying to figure out their concerns and what they're raising to the president on it. Look, one of the issues is if you keep the tariffs as is at 145% on China, that's going to mean very serious things. For a family that has a baby, you're required by law to go buy a baby seat, a car seat. Right now, that costs $350. In a few months, if that's still 145% tariffs, that's going to cost $720. So that's a big price pain point for families that are trying to get by with this. If you look at bananas, we import almost all of them from Costa Rica. Avocados, we've mentioned in the past, coffee. It just starts to layer on, and the total cost for the basket, particularly for Americans who might be living paycheck to paycheck, is going to be something they really sit up and pay notice to. Now, we have seen lower inflation numbers that have come in, but those are backward looking. And from what I'm hearing, in the not too distant future, in the very near immediate future, you could see big pickups in the inflation numbers just based on the tariffs as they stand today. Now, we've wound that down and we're giving that 90-day grace period, but those tariffs could start to hurt very quickly in a matter of months.
One note, because we were just discussing the timing of this interview. So published just now in real time. However, the interview took place on Tuesday.
Oh, man, that's complete, like Tuesday. That was like a year ago.
It feels like a year ago. Now, if you go back and try to rewind.
Tuesday was when he was taking down his tone on some of this. Because it came after Monday's meeting at the White House.
Well, so what's interesting is he took down his tone on Truth Social, I believe, on late Tuesday. Scott Bessent was also trying to take. So
did this interview happen before or after? And time needs to tell us because.
Hard to know. So we're gonna try to get to the bottom of that.
Thanks a lot, Time.
But there's the news, and the question is whether the market should take too much away from it, given the timing of when it took place and just how much of a roller coaster this past week.
Why would they spend 3 days before they put that out? Like,
I don't know.
When the president tells you something, you better publish it immediately.
Better publish it immediately.